Hello everybody, it is Ramirez Trades. It is now Saturday. It was Friday a little ago. It's 12:30 right now. But I have recorded yesterday's video, Friday, of Growing a Small Account, episode 4. It is already recorded and edited. I just have not uploaded it yet. That'll probably happen later today in the afternoon. But for this video, I did just want to go over how to draw zones. I did record a video before this on how to draw zones, confirmations, and what I look for entries and exits, but it was kind of long videos, over 20 minutes. So I am just going to be recording on, do a recording on how to draw the zones right now, and then in separate videos I'll be doing confirmations. Sorry, right now I'm doing confirmations. Next video I'll do how to draw the zones. Alright, so confirmations. Let's get into it. I have a sheet right here. You guys can pause, take a screenshot for like, but this is the basis of what I use for my confirmations in terms of my trades. You can also add volume right here. Volume is always a good indicator. You can see right here. You can see the amount of buying and selling volume there is per candle. This is very helpful. But first off, long wicks developing in zones. When you see a long wick, that's usually an immediate rejection. This is a very good sign when it comes to supply and demand. It shows that there are participants disagreeing on the price. So if there are long wicks, that means sellers are not strong enough or buyers are not strong enough to push price up or down a certain area. So in this case, we did go up, immediately rejected, tried going again, and rejected again. That shows that buyers were not strong enough to keep price and push price up there. And as a result, led to a sell-off. So that is long wicks. Candle structure. So the same way that the demand and supply zones can form can also act as confirmation. So right here, I don't chart out 5-minute zones, but this is a perfect example of a zone forming close to a zone. Oh no, didn't mean to do that. I'll change that later. Okay. So right here, you can see we touch supply. We've rejected. We still held this high, and then the next candle over, a big push down, which resulted in a formation of a 5-minute supply zone at this area. I'll go over how to draw them in the later video, as I just said. And we go back, reject off of it, we go back up and test it again, that same zone that we had just formed. So supply forming at or near zones can act as confirmations to take a trade short. It would have been a nice sell-off over into demand. It's a textbook trade. Get at supply, sell at demand, or vice versa. Alright. Next one over. Stalling out in the zone. I don't have any examples of this, but obviously with the name stalling, price is failing to move up or down in a zone. And that is usually with orders getting filled. The way zones are formed is institutional orders being left unfilled. So when price does go back into a zone, those orders begin to get filled, and depending on participants, it will either push price down or up, right? So if it's stalling out, that's usually buyers and sellers fighting on where to push price. So in that instance, you're really just looking for which direction you're going to go. In this case, we hit the supply, rejected immediately. We did come back into it and created a double top, rejecting again. You can see that more clearly on the 1 minute right here. Alright. Failing to hold high of day or low of day breaks. This is also an example. We did break high of day right here, broke it again. We failed to hold it and sold off. We did come back, break it, failed, broke it again, almost failed again. So all of these breaks, all these failed breaks, are another indication that buyers are just not strong, meaning that they're either weakening out or that just sellers are showing more strength, and you can use that to take a position going short. Patterns, personally my favorite. Again, this is a perfect example. Looking for double tops, double bottoms, inverse and regular head and shoulders, possibly triangles. I don't trade triangles at zones. If they form intraday, let's say for example a triangle forms right here, I will still take it, but I'm not going to be taking it if it forms in a supply demand zone, just for the fact that it could break towards the upside or downside, assuming it is a bilateral formation. But really just looking for patterns to form. If it does go back and retest it and reject, that is a very good sign. I personally love double tops. They're my favorite to trade. But if not, you can also look at head and shoulders. So this is an example. No, this is just a W. This is kind of an example right here. So it broke this low where it did bounce off of. A good place to get in is a break of this area, assuming you were not gonna get in, you didn't get in up here. But within what I am comfortable trading, I would be getting it around right here. This would be the ideal entry for me. Seeing two rejections, failed high day breaks, and also a lot of red volume. There's many confirmations to take this trade right here. Right, breaks of zones. Obviously, price will not always respect the zones and bounce. There will be times where it will just completely go right past it. You guys saw that in yesterday's video, in yesterday's action, where I took a trade that broke a demand zone, sold off a little bit, and it did bounce up, as you guys saw. But the breaks of those zones are usually good signs that buyers are just not present, either at the moment or at all, which can lead to all-day sell-offs. So catching a big move like this is definitely possible when there is a break of a demand zone. And when that does happen, you're really just looking to target the next demand lower if you're in puts, or if it breaks supply, you're targeting next supply over. Right, the trend is your friend. This isn't really a confirmation, it's more of a just a lesson. When you are trading, especially with supply and demand, there aren't many trades, assuming it's a quality trade, that are going to be scalps. You're really looking for large sell-offs, large price swings, really just reversals in price. So you're not looking for quick moves down. Like this could be a scalp right here, but you're not going to want to scalp a large move like this. This wouldn't make sense. You want to capture as much of the move as you can. So in that case, you ride the trend. Any small pullbacks, you don't get scared, assuming it's making higher highs and higher lows. So a good rule of thumb, assuming you're in this trade, for some reason you're in this trade, stalls out this low right here. Once we break past it, this could be your stop. Come back, try to break lower low. We do not create a higher low. This is now your stop loss, assuming it keeps pushing higher. Another pullback, never break this previous low. So you're still in the trade, create another higher low and higher high. So in this case, always ride the trend. I personally have fell victim to cutting a trade out short many times because I get scared with a pullback, even though it was still in trend. You don't want to do that. You're going to miss out on a lot of profits that way. So volume, as I just said, if you see volume spiking, that is a good indication, assuming it's seller volume. You can see there's a lot of buy volume right here, large full volume bars, and then you see a large sell-off, the majority of which was red volume. So since it was all red volume, that means that buyers really weren't present in this moment. So in this case, if you were in this trade, this would be a good indication to take a scalp, because you're really not going to be getting a larger move down since buyers did not present themselves here. And with that, you're really just looking for the next candle over. If it does bounce, then it could have been just a premature move. Hopefully I worded that correctly. Very late right now. Right, so volume, I already went over that. Don't have to worry about this. I'll be going over this tomorrow on how to draw the zones. Maybe not tomorrow, but at some point. But that is what I use for confirmations. It's really just looking for key areas of interest, which in this case are the supply and demand zones, and just using proper risk to reward. Now, the great thing about trading supply and demand is it gives you a definitive risk to reward. Let's say you did get in somewhere right here, right? Fails to break high day, volume spiking, sellers are showing strength. You get in right here, your stop loss is at this high. Get something else. Stop loss is at this high, depending on your risk tolerance. It could be at this high or just this area here, right? So that'll be your stop loss. And in terms of price targets, the usual plan, at least that I'll follow, is cut out half my position at VWAP and sell the other half at demand that's lower. Now, if it never hits demand, that one you did cut out is going to be making sure that the red never goes. The trade never goes red on you. Never want a green trade to go red. And when it comes to cutting out half your position at a certain area, it will also help you psychologically to make sure you don't sell your second runner too early. Something that I found very helpful. If you're holding on to an entire trade, your entire position in a trade, you're going to be more emotional in terms of a pullback. So if you say you're in this trade pullback, this pullback here would have scared me out for sure, right? But there was no reason to be getting out, and did not break the trend. It is still in a downtrend technically. Now it did reverse back up, but assuming we don't know what happens, yes, it did push back up, but it came right back down. Really just looking at how to better manage your trade when it comes to having a runner or keeping your full position size. But I think that's going to be all. Northern trade confirmations. Here's the sheet once again. You guys want to see it? And yeah, I will upload today's video, yesterday's video, Saturday now. Yesterday's video tomorrow around noon. It was our first red day in the series. I did not have this zone drawn out, so I did take this trade and got stopped out by this big move. But yeah, it was a $50 loss, so nothing crazy. We are still green in the challenge. So yeah, it's gonna be all. Hopefully this was educational in terms of confirmations. I will be creating a video on how to actually draw the zones in a future video for those of you that are interested. Alright, and I will see you guys later. Have a good night.